The more important question is whether regulation is effective in reducing risk. And there, I think we have grave doubts, I do at least, from looking at the experience we've had with regulation in the United States and elsewhere.
You have grave doubts about whether it's possible to do? It's not possible to have regulations that will accomplish it?
You can have regulation, but it's not clear that regulators, even with regulatory power, are able to prevent banks and other financial institutions from taking the risks that might get them into difficulty. And in fact, regulation might be creating moral hazard so that they are taking more risks. Let's assume, for example, that banks are required to hold more capital, which is now what is supposed to be better regulation. Does holding more equity capital reduce risks, or does it induce banks that are interested in return on equity to take more risks? The assumption is that more equity capital somehow reduces risks, but that's not entirely clear.
Great Decisions is produced by the Foreign Policy Association, inspiring Americans to learn more about the world.